Hey folks, it's Alex Blencar and I'm back at the kitchen table. Today I wanted to talk to you guys about the 5 biggest mistakes that first-time buyers make when they're purchasing a home. Number one is buying a home too quickly or for the wrong reasons. So I might be the first realtor to ever say this, but it's okay to rent. It's okay to rent a home. I never advise any buyer to purchase a home because they feel like they should or because all of their friends are buying homes. Buy a home because you want to. I always advise buyers to think about the reason as to why they want to purchase a home. What is it going to accomplish for you? Is it something like building a family, or something simple like having a little bit more space or the ability to renovate, or even financial goals like building wealth? Always think about the reason as to why you want to purchase real estate. Number two is not using a mortgage broker. I see a lot of buyers skipping this step because they don't want to have to pay an extra fee and they think it will cost money to use a mortgage broker. But oftentimes this isn't the case. Now, it will depend on the lender, but most lenders will actually cover the mortgage broker's fee for you so you don't have to pay anything. Most buyers will just use the bank that they bank with. Now, the problem with this is that the banks tend to only have one or two different mortgage products, and you have to qualify based on those one or two products that they offer. They will typically have a specified interest rate with a certain term, certain privileges, and a specific amortization that you have to abide by. The awesome part about a mortgage broker is that they oftentimes work with 50 plus different lenders. And often one of those lenders is actually the bank that you bank with. The bonus of using a mortgage broker is that they can get you different options in terms of interest rates, in terms of privileges and terms, and amortization schedules. This can help save you thousands of dollars over the life of your mortgage. Number three is the home inspection. So during the craziness of the bidding wars over the last 2 years, I heard many horror stories of buyers going into homes and purchasing without a home inspection condition. I always advise my clients to go in with a home inspection condition in their offer. This allows buyers to back out of an agreement of purchase and sale if they deem that the results of the inspection report were unfavorable and they don't want to move forward with the transaction. For example, oftentimes inspections will bring to light something called asbestos paper. This was a type of insulation that was used in the 1950s and is found in many of the wartime homes in the city of Peterborough. A qualified home inspector will be able to bring this to your attention and advise you to get it tested so that you're not left with asbestos in your home. Another benefit of a home inspector is that they will inspect things like wiring. They'll go through all of the outlets in the house and look for ungrounded or reverse polarity in the outlets, as well as look for knob and tube wiring. Not only can this limit your chance of a fire, but it can also help you save money on your home insurance. Number four is draining your savings. So in most cases in Ontario, you can actually purchase a home with 5% down. Now, yes, this does mean that you will have to pay mortgage insurance because your down payment is less than 20%, but that's not always a bad thing. I would never advise someone to spend all of their savings on a home. Now, this world is unpredictable as we've seen in the last 2 years, and even a steady job is not always guaranteed. Myself, I always try to have about 6 months of savings in my account. Now, I'm on commission, and if you aren't on commission, I would probably advise around 2 to 3 months of savings just to have as a safety net in case anything happens. Because of that unpredictability, it's not always wise to use those $10,000 to $20,000 that you have as your safety net to put towards your down payment. Now, yes, this does mean that your monthly payment might be a little bit higher because your down payment is lower, but at least you have a safety net in case there was a layoff or an emergency that happens in your life. Number five, not doing enough research. So maybe you're at the point where you are ready to go out and purchase a home and you're at a fantastic point in your life. Congratulations. Now, I would always advise that you try and see as many homes as possible as a first-time buyer. Now, in most cases, I found that buyers will know when they find the right home. They'll walk into a home and they'll get that feeling. But what's important is that you go out and see a number of homes before that point so that when you do find that perfect home, you have a point of reference and you can compare it to other homes that you've seen. Additionally, take advantage of the perks that you have as a first-time buyer. The Government of Canada actually offers several incentives to first-time buyers, such as help with their down payment and a tax rebate. Now, I made a video on this a couple weeks back. I'll link it up here, and I'll put down in the description a PDF that I've created with all of the incentives for first-time buyers in the country of Canada. Alrighty guys, that's all for me. I hope you liked this video. Those are my 5 most common mistakes that I see first-time buyers making when they're going to purchase their first home. Now, if you like this video, drop me a thumbs up and hit the subscribe button down below. It really helps out the channel. And until next time, guys, I'm Alex Blencarn, and this is The Kitchen Table. Take care.